If you've been hearing anything about the stock market recently, then you should know Tesla stocks are one of the most exciting stocks out there. Since day one, Tesla stocks have always been at the center of the news. It's been pegged as a high-risk, high-reward stock by many, and with a controversial superstar for a CEO, there's no telling what heights Tesla might reach. This is why it's so popular. It attracted so much attention in 2021, reaching $1 trillion market cap. Is Tesla stock worth all the hype in the market? Would you want to buy Tesla stock? Tesla stock fell 11.99 on the 1st of February, extending losses for the second day after CEO Elon Musk recommended selling 10 of the shares in the electric vehicle company over the weekend. The dip is on track to be the stock's biggest of the year, and it comes after a roughly 5% decline on February 3rd, moderating the stock's mainly upward trend for the year. Overall, Tesla stock is up more than 47% in 2021, more than doubling from a year ago, as the company reported improved automotive margins and overcame a chip shortage to ramp up production, while competitors struggled since October 28, 2021, when Tesla's market cap topped $1 trillion. Current and past board members such as Chairwoman Robin Denholm, Elon Musk's brother, Kimball Musk Iron Price, and Antonio Garcias have sold hundreds of millions of dollars worth of Tesla stock in 2012. Musk was given a sizable options package as part of the CEO performance plan because he does not receive a salary or cash bonus. His wealth is derived from stock awards and increases in the value of Tesla's stock. The award in 2012 was for 22.8 million shares at the strike price of 6.24 cents. These will run out on August 13, 2022. Despite recent insider sales, Jeep boosted its Tesla price estimate from $950 to $1,400. In a report released on Monday, without disregarding execution risk, Tesla is getting to a point where it can mix affordability and speed goals that are as crucial as profitability in Elon Musk's ambition, stated analyst Philip. He expects Tesla to continue its lead in the battery electric section of the new vehicle market for years to come, as do many other hand, is facing new competition from both upstarts and established automakers. Riverside, for example, an electric vehicle startup backed by Amazon, Ford, and Cox Automotive, is set to go public this week. The R1S, a 3-row, 7-passenger sports utility vehicle, will be delivered to customers next month. Geely, a Chinese automaker, has just revealed a heavy-duty battery-powered electric vehicle to compete with Tesla's Semi, which has been delayed. Volkswagen sold over 12,000 of its ID series fully electric vehicles in China in October and over 16,000 electric vehicles in total in China last month, according to data released this week by the China Passenger Car Association. While Tesla sold an estimated 13,725, they're opting to export 4,666 of the 54,391 electric cars it made in Shanghai. Instead, Tesla China has a habit of starting quarters slowly and finishing strongly. The number of deliveries in September, for example, exceeded 50,000. As a result, it's difficult to draw firm conclusions from October's figures. Michael Dune, CEO of car industry advisor Zozo, Tesla shares may also be weighed down by uncertainty about the company's semi-development and relationship with rental car company Hertz. Tesla's semi-manufacturing is still in development, according to the company, while Pepsi official anticipates Tesla to deliver some of its heavy-duty trucks to the food and beverage titans. This quarter, Hertz announced that it's acquiring 100,000 electric vehicles from Tesla for its rental fleet, and interim CEO Mark Fields confirmed that the two businesses have a deal. Musk, on the other hand, has stated that there's no contract in place with Hertz for the big order. Tesla's future holds a lot of promise, but it's difficult to predict. Investors should keep their expectations in check and consider the risks that Tesla could face in the next 5 to 10 years. Tesla automobiles are still prohibitively expensive, even with strong government incentives such as tax rebates for alternative technology. Tesla's models still have a high price tag, starting at $94,990 before any incentives or discounts in November 2021. As of May 2021, Tesla's latest lower-cost choice, the Model 3, costs $43,990 before tax credits and gas savings, which are still out of reach for most drivers. The cars are not just costly for individuals to purchase, but also for Tesla to manufacture, according to Vertical Group analyst Gordon Johnson. The firm lost almost $14,000 on each model of 3 vehicles sold in 2018. However, These figures should improve as the company grows. Tesla's battery supply may be depleted. A lack of batteries to power Tesla's devices was one of the company's early issues. Tesla's Gigafactory in Sparks, Nevada, is still under construction and is expected to address the company's battery crisis with a planned area of more than 1.9 million square feet. The lithium-ion manufacturing factory will allow Tesla to ramp up production to more than 500,000 cars per year. Major projects such as the Gigafactory are frequently beset by logistical and regulatory challenges, and it's unclear whether the factory will be completed on schedule. The Gigafactory has received approval from the Nevada government, and it's estimated to generate $100 billion in additional economic activity over the next few decades, despite the fact that the plant is just 30 years old. Musk has hinted that the business may require multiple gigafactories to meet demand. To keep the company fully charged and stockholders pleased, a massive quantity of capital expenditures, or CapEx, will be required. Tesla was the leading manufacturer of plug-in electric vehicles in the first half of 2021, accounting for 14.55% of all global sales. VW Group was the second largest manufacturer when petrol prices dropped in 2014 and 2015. Tesla's allure faded after all gasoline-powered automobiles competed with Tesla's offerings, and falling gas prices made them more economically appealing. Gas prices don't have to stay at decade-low levels to hurt Tesla stock prices. They only have to be low enough to keep older cars on the road. The problem with Tesla's gas comes from two directions at the same time. The first issue is rising global oil production. The once dominant peak oil theory appears to have been debunked. With global oil production rising every year from 2009 to 2019, oil companies are getting better at extracting it thanks to hydraulic fracturing and horizontal drilling. Petroleum resources are growing, while internal combustion engines are becoming more fuel efficient. The average fuel efficiency of light-duty passenger cars in the United States continues to increase, according to the Bureau of Transportation Statistics. Tesla will need to sell a lot more cars if it wants to become a mainstream automaker and produce steady cash flow. If petroleum-based fuels remain a considerably cheaper alternative, consumers will be less likely to switch to electric cars. Tesla isn't the first company to manufacture electric vehicles. Interestingly, Thomas Davenport may have invented the first electric autos as early as 1834, although Tesla appears to be the most successful thus far. The Chevy Bolt and the Nissan Leaf, two noteworthy competitors, failed to gain popularity early on because of the high retail prices and limited driving range. As of October 2021, the Nissan Leaf starts at $27,400 before incentives and has a range of up to 226 miles. Apple Incorporated believes it can compete with Tesla in the transportation market, while Google has also placed bets on the auto industry. Tesla is understandably concerned about companies with larger existing customer bases. "We're going to spend astounding sums of money on CapEx," Musk, as he famously stated about his company. Many investors want substantial capital expenditures, but there must be a return on investment. This appears to be especially true in a young industry littered with failed ventures. Tesla has already spent billions on the development of the Model 3 and Model X automobiles development, and the battery facility will be no different. Tesla anticipated in an SEC filing for the first quarter of 2021 that capital expenditures would likely increase to $4.5 billion or even $6 billion per year. Tesla's reliance on Elon Musk was mentioned in the same quarterly report. Tesla is highly dependent on the services of Elon Musk, Tesla's techno king, and our chief executive officer. As the company said, Musk is a very active businessman. Before joining Tesla, he was the CEO of PayPal, and he's now the CEO and Chief Technical Officer, or CTO, of Space Exploration Technologies. He is also the chairman of SolarCity, a company that installs high-priced solar panels. The departure of a top executive could be a significant setback for the business. Tesla's success as an electric vehicle manufacturer is difficult to argue with a trillion-dollar valuation. However, numerous potential roadblocks remain, ranging from the difficulties of producing affordable EV technology to the threats posed by competitors. Do you support the Tesla split? Comment down below.